Hello viewers, welcome to first PUC Accountancy class. In the last class, we have studied what is journal, what are transactions, what are the rules of debit and credit, and how to pass journal entries in the books of a particular business organization. In today's class, we will try to understand the same concept with some other examples or some other problems. The link of the question is provided in the video. You can refer the same link for the question. The question is, from the following particulars, pass the necessary journal entries. The first transaction, business commenced with the capital of rupees 6 lakh. Now, the first task is to find out the two accounts involved in the transaction. So, in this particular transaction, the two accounts involved are cash account and capital account. Next task is to find out this belongs to which class of account. Cash is an asset, capital is an capital. Next, we have to find out whether the value of these classes of accounts increases or decreases. Cash is an asset. Whenever you invest cash into your business, the cash value automatically increases. So, the asset value increases. The rule says that when the asset value increases, it has to be debited. Next is the capital. When you are investing capital into your business, the capital value also increases. Increases in the capital has to be credited. So, the journal entry will be cash account debited to capital account. Now, in this problem, the date is not mentioned. That means, in the date column, we will be recording the transaction number. First transaction, the entry is cash account debited to capital account, cash account debited to capital account. Amount is 6 lakh rupees. 6 lakh in debit column as well as credit column. Next, you have to write the narration. Started business with cash. Started business with cash, and draw a line only in the particulars column which indicates the transaction as ended. Second transaction, rupees 4,50,000 deposited in a bank account. You are deposited 4,50,000 into your bank account. Find out the two accounts involved. The two accounts involved are bank account and cash account. Bank is an asset. Cash is also an asset. Now, you are depositing 4,50,000 into your bank account. That means bank balance will increase. So, asset value is increasing. Rule says that when the asset value increases, it has to be debited. So, debit. Next, you add cash in your hand. Now, you are deposited into bank. That means cash in hand balance will reduce or decreases. So, the asset value is decreasing. When the asset value decreases, it has to be credited. So, the journal entry will be bank account debited to cash account. So, the second transaction entry is bank account debited to cash account. Amount is 4,50,000. Next, write the narration. Deposited cash into bank. Deposited cash into bank. Draw a line. Transaction is ended. Next transaction, rupees 2,30,000 plant and machinery purchased by paying rupees 30,000 cash immediately. Now, the total value of plant and machinery is 2,30,000, out of which only 30,000 is paid immediately in the form of cash. So, 2,30,000 minus 30,000, remaining balance is 2 lakh rupees. Now, this 2 lakh rupees, there is no information. That means, to that extent, it is a credit transaction. That means, 2 lakh rupees will be paid in the near future. We are not yet paid. It is a credit transaction. Now, first we have to find out which are the accounts involved in the transaction. You have purchased plant and machinery. So, plant and machinery is one account. You are paid cash worth rupees 30,000 immediately and remaining is on a credit basis. That means, they are your creditors. Next, plant and machinery is an asset, cash is also an asset, creditors is liability. Whenever you buy plant and machinery, the value increases, asset value increases, increase in the asset value has to be debited. You are paying cash, cash is going out of the business, cash balance reduces or decreases. So, asset value decreases, decrease in the asset has to be credited. Now, creditors is nothing but your liabilities. You have the obligation or responsibility to make payment in the near future to the extent of 2 lakh rupees. That means, you have an obligation. Now, they are the liabilities. Here, now the liability value increases. The rule says when the liability value increases, it has to be credited. So, the journal entry will be plant and machinery account debited, to cash account and to creditors account. So, we will pass the journal entry. Transaction number 3, the entry is plant and machinery account debit, plant and machinery account debit to cash account to creditors account. Here the creditor's name is not given, therefore, we will write it as creditors account itself. Total value of machinery is 2,30,000, out of which 30,000 rupees is paid immediately in the form of cash. So, cash account 30,000, 2,30,000 minus 30,000, remaining balance is 2 lakh, the value of creditors. Next, write the narration. Bought plant and machinery and paid cash and balance on credit. Draw a line which indicates that the transaction has ended. Now, one page of journal is completed. That means, next step is you have to calculate the total of all these transactions. 6 lakh plus 4 lakh 50,000, 10 lakh 50,000 plus 2 lakh 30,000, 12 lakh 80,000. So, the total on both the sides is 12 lakh 80,000. So, this is the total carried forward to the next journal page. So, the total brought forward from the last journal page is 12 lakh 80,000. Fourth transaction, purchased goods worth rupees 40,000 for cash and rupees 45,000 on account. Now, we will find out which are the accounts involved in the transaction. Your purchased goods, first account is purchases. Next, you paid cash to the extent of 40,000 and remaining on account, that means on credit basis you have purchased the goods. So, the three accounts involved in the transaction are purchases account, cash account and creditors account. Now, purchases is an expense, cash is an asset, creditors is an liability. When you purchase the goods, your expense value will increase. So, the rule says that when the expense value increases, it has to be debited. You are paying cash to the extent of 40,000, cash is going out of the business, cash balance will come down or it will reduce. So, when the asset value reduces, it has to be credited. Creditors are your liabilities, you have the responsibility to pay, your responsibility increases to the extent of 45,000, liability value is increasing, increase in the liability has to be credited. So, the journal entry will be purchases account debited to cash account to creditors account. Fourth transaction, purchases account debited to cash account to creditors account. Total value of purchase is 40,000 in the form of cash and 45,000 in the form of credit. So, the total is 85,000. $40,000 is cash, remaining 45,000 credit. Next, write the narration. Purchased goods on cash and credit basis. Draw a line after narration. Fifth transaction, paid a check of rupees 2 lakh to the supplier for plant and machinery. Now, in the previous transaction, you had purchased plant and machinery of 2,30,000, out of which you are paid 30,000, balance is 2 lakh. That means you are not yet paid, you have the obligation to pay. Now, you have paid this 2 lakh rupees by issuing a check. The two accounts involved are bank account and creditors account. Bank is an asset, creditors is an liability. Now, you have paid 2 lakh rupees to your creditors to that extent creditors value decreases, that means your liability value is decreasing. Rule says when the liability value decreases, it has to be debited. Now you have paid them by issuing a check, that means your bank balance will come down to the extent of 2 lakh rupees, asset value is decreasing, decrease in the asset value has to be credited. So the journal entry will be creditors account debited to bank account. Amount is 2 lakh rupees. Write the narration. Paid to the supplier by check. Paid to the supplier by check. Next, you have completed one more page of the journal book. Calculate the total and carry forward the same total to the next page. 12 lakh 80,000 plus 85,000 plus 2 lakh. So the total carried forward is 15 lakh 65,000. 15 lakh 65,000. Same total has to be carried to the next page. So the total brought forward from the last page is total brought forward from the last page is 15 lakh 65,000. 15 lakh 65,000. Next transaction, rupees 70,000 cash sales of goods costing rupees 50,000. You have sold goods on cash basis for rupees 70,000. Actual cost of the goods is 50,000. This cost of the goods is an irrelevant information. Here you want to know what is the amount at which you have sold the goods in the market. The amount of sales is 70,000. First find out the two accounts involved in the transaction. One is cash and second one is sales. Cash is an asset, sales is an income or revenue. You have sold goods and you have received cash, cash value increases. Increase in the asset has to be debited. You have made the sales, sales is an income for the business, your income value increases, increase in the income has to be credited. So the journal entry will be cash account debited to sales account. Sixth transaction, cash account debited to sales account. Amount is 70,000. Write the narration. Goods sold on cash. Goods sold on cash. Next transaction, withdrawn by the proprietor rupees 35,000 cash for personal use. Now proprietor is nothing but the owner of the business organization. The owner of the business has withdrawn, he has taken back some amount out of the capital for his personal use or his private use, or we also call it as domestic use. Now, from the capital amount which he has already invested, he is taking back this amount. Now, the two accounts involved are, one is cash, he is withdrawing cash and it is a part of capital. So, drawings is nothing but it is a part of your capital amount. So, cash is an asset, drawings is capital. You are withdrawing amount out of your capital, so that to that extent capital amount decreases or it reduces. When the capital value reduces, it has to be debited. You are withdrawing cash, cash is going out of the business, cash is an asset, asset value decreases, decrease in the asset has to be credited. So, the journal entry will be drawings account debited to cash account. Seventh transaction, entry is drawings account debited to cash account. Amount is 35,000. Write the narration. Withdrawn cash for personal use. Withdrawn cash for personal use. Next transaction, insurance paid by check rupees 2,500. The business has paid insurance premium and the amount of premium is 2,500 and they have paid it by issuing a check. Now, the two accounts involved in the transaction are insurance premium and bank account. Insurance premium paid is an expense, bank account is an asset. You are paid your premium, to that extent your expenses will increase in the expense has to be debited. You are paid it by issuing a check, your bank balance will reduce, decrease in the asset has to be credited. So, the journal entry will be insurance account debited to bank account. Eighth transaction, insurance account debited to bank account. Amount is 2,500. Write the narration. Paid insurance by check. Draw a line. Next, you have to calculate the total of this page, total carried forward. So, the total carried forward is 16,72,500. 16,72,500. 16,72,500. This total will be carried forward to the next page. So, the total brought forward from the last page is 16,72,500. Record the same total. Total brought forward 16,72,500. Next transaction, salary of rupees 5,500 outstanding. Now, the meaning of outstanding means it is not yet paid, yet to pay. You have the responsibility to pay this salary. Now, the two accounts involved are, one is salary account and one more is outstanding salary account. Outstanding salary means you are not yet paid. That salary is of the current accounting year, but during the year you have not yet paid. You are yet to pay. It is outstanding on the part of the business organization. Now, salary and expense. Outstanding salary means it is an liability. When you are paying salary, you are supposed to pay the salary, your expenses will increase. Increase in the expense has to be debited. Outstanding salary is an liability. To that extent, your liability value also increases. Increase in the liability has to be credited. So, the journal entry will be salary account debited to outstanding salary account. Ninth transaction, salary account debited to outstanding salary account. Amount is 5,500. Write the narration. Salary outstanding. That means you are not yet paid. Next transaction, furniture of rupees 30,000 purchased in cash. The two accounts involved are furniture account and you are paid in the form of cash, that means cash account. Furniture is an asset for the business, cash is also an asset. When you buy the furniture, the asset value increases. So, the increase in an asset has to be debited. You are paying the value of this furniture in the form of cash. Cash is going out of the business, cash balance reduces. So, the asset value reduces. When the asset value reduces, it has to be credited. So, the journal entry will be furniture account debited to cash account. Furniture account debited to cash account. Amount is 30,000. Write the narration. Purchased furniture for cash. Now, all the transactions related to the business have been recorded. After this, the next step is to calculate the total. The total of debit column should be always equal to the credit column. It must be the same total. Total. So, the total is 17,08,000. 17,08,000. So, this is how the journal entries are being passed in the books of any business organization. Thank you so much.